What's up, everybody? My name is Jason, and welcome to Small Biz. In today's must-watch video, I'm going to clearly explain why MULN may not want to do anything bigger than a 1-for-9 reverse split, because if they do, and we drop under $1 within the next 18 months, it's an automatic delist and straight to the pink sheets. All that and more coming right up. All right, ladies and gentlemen, we have 11:58 last trade on TTOO. Yeah, I'm without the watch. I might not have my mojo today. I don't have the $20,000 Breitling Super Avenger with 23.8 carats. Yeah, in case you're ever wondering, that's the first and only time I'm ever going to tell you. But I'm more importantly going to share with you today why it's absolutely crucial. David, if you're watching, or Financial Journey, make sure you pass this message along. And I want to, before I go any further, thank the one gentleman, I wish I had his username on Twitter, follow me at Try Small Biz, who correctly pointed out the or more clause. So simply put, there is a rule called 3810, and it's got multiple levels, A, B, C, numerals, etc. And it says in third grade language, you cannot do more than a 1 for a 250 ratio in a 2-year period. So several months ago, we all know, MULN did a 1 for 25 reverse. So I incorrectly thought, and so did Investors Place, whose article I will pin, and they finally got it right, in the top comment on YouTube. I thought that if you did a 1 for 10 in the next 30 days, we're fine. Wrong. And this is crucial that it gets back to David and company at MULN. You can only do a 149-to-1 ratio, i.e. 1 for 9. So, for example, if we do a 1 for 9 right now, last trade, 128, let's call it 13 cents. We're barely over $1. What is that, $1.10, $1.15? Meaning we have absolutely no wiggle room. So if he's thinking about doing 1 for 10, not only does he have no wiggle room, and he may have said that yesterday from what I keep hearing, but if we drop back down under $1 without holding in order to get compliance with such a small ratio of 1 for 9 or 1 for 10, it's an automatic delist to the pink sheets. I will explain in a minute what I would do, but let's assume for a moment they go big. I predicted 2 months ago now, 50-to-1. So let's say, for argument's sake, it gets demoralized down to a dime, reverses to 5. Under this rule, I'm going to call it the 1 for 250-to-1, 1 for 250 reverse split rule. They cannot go under $1 for the next 18 months, or it's automatic delisted. So it's possible they go big. They go 50-to-1. It's a $5 stock. They're drooling all over the place. Oh, God, just think of the dilution that we're going to be able to do in the first quarter of 2024. And then it's 4. It's 3. More dilution, more money. Maybe they get up to $500,000 in the bank. Quite possible. 2, 1. The minute it prints 99 cents inside of that 2-year window, it's an automatic delist to the pink sheets, and this fucking company and stock, including folks like myself who are long big at 63 cents, are toast. So what would I do before I get you back at 2 o'clock? And before I go any further, Fed's going to raise by a 1/4 point. I don't think they should. You got bankruptcies at a 13-month high. You've got retail sales that are fading. You've got inverted yield curves. They should stay higher for longer and do somewhat of a hawkish conference. They won't. They're going to raise. They don't want to do what Volcker made the mistake in the 80s. They're going to raise, and quite possibly one more time. I'm on record right now. It's a fucking mistake, but we are in the midst of our third major secular bull market since 1940. I think it goes roughly to 2035. The Dow's going to double and the NASDAQ's going to triple, in my opinion, but that's not without corrections or bear markets along the way. But we have got now, 13 days, well, we're down. 12 days in a row we had of the Dow Jones Industrials up. They moved out of tech. They moved into financials and industrials. We need to pause. We need to go sideways, preferably down to retest 4,200 on the S&P and touch and hold the 50-day moving averages. But what the fuck do I know? In closing, I am long a stock otherwise known as MULNs. What I would do, and I can't stress this enough, share your comments after this video. Make sure it gets back to David. You have the August 3rd vote. They already have the yeses. with all due respect to the stock twitaholics out there with the $50 and $100 price targets, your no doesn't fucking matter. You might think it matters, and I think it'd be a death sentence if they went to OTC automatically. They couldn't raise money. It'd be the stench of the EV market. We don't want to see that happen. What I prefer to see happen, because they will pass a reverse split, is the following. The stock right now is stable at 13 cents. To my knowledge, David has not bought back any of the $25 million, which would be close to 200 million shares of the buyback he announced several weeks ago. The event to roll out the commercial trucks and vans is the 24th. So if it's me, I pass the reverse split of 1-9 on August 3rd. I come out either slightly before the vote or after to confirm the ratio. 1-for-9. We don't want a big one, even though you could have 18 months to hold $1. We don't want that. What I would do instead is to get all the retail money, and you could do this cleverly with the proper news releases and marketing. Get them all goosed up. Say, we're not going big at 1 for 50, like Jason said. I'm not doing the 1 for 100, which was the kiss of death when we readjusted the SEC filing. I'm going 1 for 9, and I certainly hope that our retail investors who have supported us along the way understand what this means. We, over the course of the next 30 days after this split, have to hold $1. I think the excitement of going 1 for 9, the rollout of the vans and trucks, the money coming in the door beginning the 24th, and I hope like hell they got the cameras there and they're making a shit ton of fucking noise, the stock would probably goose up on its own to 20 cents, whether it's with the help of the buyback or the insiders like Acuitas that want to see the stock regain NASDAQ compliance. And again, I will pin the Investor Place article below. So if we get it to 20 cents, they do the reverse split the week of the 24th or thereabouts. It goes to 180. 20 times 9 is 180. We have that margin of error. What is it? A 65, 70% drawdown that we'd have to hold for at least a month. You might say to me, wait a second, it's only 10 days. Wrong. They did that several months ago and failed. And one of the bylaws of Rule 3810, again, pinned in the top comment of YouTube and on Twitter, is the direction of the stock heading into and after the split. In other words, a few months ago, it got as high about a 170 after the split, 160, 150, 140, bounced around a little bit. At 118, I said, don't buy any more. This thing's dropping like a rock. It held $1 barely for about 10 and a half days. In my opinion, and I talked to somebody at NASDAQ today, not someone who would have the ultimate decision-making power with respect to why they declined to acknowledge the regain of compliance from MULN. It's the direction of the stock. It was falling like a fucking rock, and somebody at NASDAQ said, we're not going to give them compliance. The direction is in the southerly direction and fast. But if MULN had been 150, 160, 175, 180, 190, they would have agreed, in my opinion, along with this other gentleman at NASDAQ, they would have agreed to give NASDAQ compliance several months ago. They didn't. It's still NASDAQ non-compliant until September 7th. Slow down, Jason. It's almost 2 o'clock. I want to get you guys out of here before then. They have until September the 7th to get back up and over $1, whether it's organically or most likely with a 1 for 9 reverse split. Turns into 180. They continue the news flow beyond the August 24th launch. Retail, and there's a lot of smart, well-intentioned people watching me right now, myself included, quite possibly, would throw some money at this along with the buyback because we don't want to see it go under $1. And it's going to have to stay for 20 trading sessions, in my, along with this gentleman at NASDAQ's opinion, in order to regain compliance. If it does, and it then goes under $1 a month later, 3 months later, they would be eligible for a 180-day or 6-month extension. And if they're cranking out revenue in early 24, they'll probably get another or a total of a year extension to get back over $1. But last point, if they go big and it's a $5 stock and it's 4 and it's 3 and it's massive dilution and it goes under $1 within the next 18 months or that total 2-year period, it's an automatic, you're out of here and you're trading on the pink sheets. Until next time, ladies and gentlemen, first move, wrong move on the market. If we melt up, we're going down over the next few days. Until next time, always remember that I love you and thank you so much for watching. Not fucking bad without the watch.